For our FinTech Spotlight segment this month, we are featuring our sponsor, Personal Capital, an industry-leading wealth management company. I've invited the Director of Portfolio Implementation for Personal Capital, Brendan Erne, on the show to tell us a little bit more about the company and how its free tools are helping clients build wealth. But first, we are going to discuss socially responsible investing and if it pays well to do good. Welcome to the show, Brendan.
Thank you, Andy. Pleasure to be here.
Absolutely, absolutely. So can you help us understand a little bit about what socially responsible investing actually is?
Yes. So the way I think about this is really in two camps. So you have one camp, which is called exclusionary or negative screening. And this is the process of really just identifying areas of a portfolio or the market that you want to avoid that may not align with your values. So maybe that's something like tobacco, maybe that's big oil or something along those lines. And that historically speaking has really been the predominant form of social responsible investing, at least for the last several decades. And it still is used very much widely today, but there's kind of another camp, and this is the newer camp, is what's called inclusionary screening or positive screening. And what this focuses on is companies or an aspect called ESG. I don't know if you've seen that in the market. You've probably, if you read some of the financial news, you've probably seen that many, many times. It's a very hot area of the market right now. But essentially, this stands for environmental, social, and governance. And it's an additional layer of analysis where companies are evaluated on their management of issues within those categories to assess their corporate responsibility or their social responsibility, so to speak, and sustainability. So to hit a couple of those, like the environmental pillar, that can include things like your carbon footprint, your greenhouse gas reduction programs, renewable energy programs. The social aspect might include things like diversity of your workforce or safe working conditions. And the governance is more traditional factors that you've probably heard of, like board independence and executive compensation. So all of these factors are evaluated to see how well a company is managing them. And essentially that way you can go in and proactively seek out companies that are better managing ESG issues. And so that's really where the industry has transitioned to today is ESG.
Got it. That makes a lot of sense. So who is defining all of these? I mean, is there an index that says, yes, this is ESG or yes, this is SRI? How does that get defined?
Yeah, so there's a number of basically third-party research firms that are providing kind of index scoring data on basically the stock universe globally. A couple, the big ones, Sustainalytics. They're a firm that we actually use or we partner with for our social responsible investment offering. So we use their data. MSCI is another big one. So they provide scoring data. So there are a number of other people, but those are kind of the two biggest. And then you kind of use that scoring data to create your portfolio how you see fit.
Got it. All right. Well, there's a lot of people out there that I think they're nodding their heads saying, yeah, I'd like to save the planet. I love diversity. I want to be able to make sure people are feeling included. And, maybe I'm not into tobacco or whatever. They're all nodding their heads. But maybe they're worried about sort of losing out on their returns if they go this route. What does the data show? If people go green or take care of, their fellow man, are they losing out?
It's a great question. It is actually the single most common concern that we see out of any prospect that comes our way, or client for that matter, that they are concerned about performance. And I'll kind of break this down into two components as well. And what I want to talk about is financial performance. And what I mean is the financial performance of the company that is actually better managing ESG issues, as well as the stock performance and how that relates into their actual performance, over time for an investor. So the financial performance, and I'll start by saying ESG issues are financially material to a company's bottom line. That means they actually can have an impact on profitability. So you think about something like an industrial manufacturer. If they go in and they reduce their water and energy footprint, that lowers their input costs and flows through straight to higher earnings. So that's an easy example. Can also work in the opposite direction. If you're a poor performer, let's just say you're a big oil, gas, and giant, and there's a big carbon tax that's all of a sudden implemented by the government. You're going to see a significant negative impact on your bottom line. But the same can be said for other categories as well, in the social and well as the governance. So just companies doing right by their employees are better able to retain top talent, and then greater levels of diversity, particularly at the board level, have been linked to better financial performance and greater levels of innovation. And that's really the story, is that studies upon studies have shown that companies better managing ESG issues tend to be more profitable and produce stronger financial results. The second component is the stock performance. And so I usually point to this study every time I'm asked about this. So Deutsche Bank and the University of Hamburg in Germany did a meta-analysis where they actually went back in time and aggregated over 2,000 studies on ESG and socially responsible investing. This is probably the most comprehensive study that we've seen. And one of the primary conclusions of this was that you had to suffer no negative performance detriment by investing more responsibly relative to traditional approaches. But on top of that, there's now kind of a growing number of studies that are suggesting there might actually even be a performance benefit to investing this way. Another one that I like to point to is one out of Harvard Business School, where they took a select set of U.S. stocks and they basically ran it over 20 years and put it into quintiles. So the top quintile is the best ESG performers, bottom quintile, the lowest ESG performers. And what they found was that the top performers actually, outperformed on an annual basis versus the benchmark by about 6%. So there was a material performance benefit to top ESG rated companies. But again, this is just a single study, has to be taken with a grain of salt. There's nothing to say that this is always going to be the case moving forward, but there is a growing body of research suggesting that there might be a performance benefit.
Got it. Well, so generally, what has the adoption rate been for investors? Is this something that people are flocking to?
It very much is. So I will say it started and gained the most traction in Europe. So Europe's a lot further along with this than the United States, but where it came to the United States and where it's been just kind of spreading like wildfires in the institutional world. So these are the large pension funds looking for more ESG offerings. And so there it's growing very, very rapidly. And what we started to see is it filtering down into kind of just the everyday retail investor. So the US SIF, which is just a sustainable investment forum in the United States, does a trend analysis every couple of years where they actually try to pinpoint how much is being managed in socially responsible or sustainable strategies. And what they saw was over the last 2 years, it increased to about 17 trillion in 2020, which is about a 42% increase than the previous 2 years. That has some form of sustainable mandate when being managed. So, that's a very, very large number. That's about 1 in 3 of professionally managed US dollars. Personal capital as well. We've seen a recent uptick in demand for our ESG and social responsible offering. In 2020, going into the year, we were about 1 in 5 clients that would approach us and choose our social responsible offering. By December, that's now averaged about 1 in 3. So we've definitely increased quite significantly there as well.
Wow. Well, let's talk a little bit about how Personal Capital helps clients with SRI. How does that process work? How do you work with clients?
Yeah, so it's an investment alternative or a choice they have when they come on as a Personal Capital client, where they can go with our more traditional offering or they can go with our social responsible offering. So the social responsible offering is definitely built a bit different. So we use what's called, an exclusionary and inclusionary approach. So we exclude certain categories from the portfolio. We don't invest in individual U.S. energy stocks just because of their predominance in fossil fuels and oil and gas. We exclude other categories, again, like tobacco. But we do take that inclusive, proactive approach of selecting companies that are better managing ESG issues. So as a whole, the individual U.S. stocks we select within that portfolio rank around the 90th percentile on ESG metrics, which is really high. So it's a best-in-class approach. And just to give you a few other data points on things like, so for carbon intensity, we score about 100% better than the broader stock market. Diversity programs, same, about 100% better. We never buy a company or invest in a company that doesn't have at least one woman on the board. And we have about a little more than a third women on boards than the broader U.S. stock market. So that's a rough idea as to like some of the sustainability metrics of the portfolio. But one of the other things that we do that I think helps our clients is we use individual stocks for the U.S. equity component, for the large majority of the U.S. equity component. And what that allows is customization, because at the end of the day, social responsible investing it's value based, and someone has their own values and they may not align exactly with this holistic approach that we've created. So that provides them the opportunity to say, well, I actually don't want to be in this area of the market. And they can make those choices if they want to. It also allows for better tax management. But again, that's something that you can't get when you just go out there and buy an off the shelf mutual fund or ETF.
Got it. Yeah, that's sort of the difference between the active investing versus sort of the passive investing. And if you work with a partner like you all, that's where you get the active help. Is that right?
Yeah, so we're not an active manager. We're not going out there trying to, pick stocks that we think are going to outperform the market. There's a lot of research that shows that over time that's just an unsustainable strategy. And so we're definitely passive, but we have a unique approach to how we, do passive management. And so it's just a more evenly weighted portfolio, kind of enhanced diversification across sectors, sizes, and styles. So we definitely do passive management, but just in a little bit more unique way.
Got it. Thanks for clarifying. I appreciate that. So, a big part of, some of my folly in the past with investing, and I've been very clear on the show, is just a lack of understanding of how advisors or firms like you guys get paid. So tell us, how does Personal Capital get paid? What are the fee structure if somebody were to work with you?
Yeah, so we're a registered investment advisor, and so we get paid an annual fee based on the assets that you have managed with us. So it starts at about 0.89% of your total assets, and then that starts to go down as your portfolio value increases. So if you invest more with us, obviously it gets a little bit cheaper. And again, that encompasses everything. So that's not just the investment management. That includes all trading costs, and that includes all financial planning needs as well, because everybody who joins does have access to dedicated financial advisors at our company. So it's a holistic kind of digital first approach to wealth management. As you know, we're very technology focused, but we do believe in that human touch. So that's why we have our advisors.
Got it. So when you say your fee, there are things like front load fees. Are those also something that might hit the client as well, or how does that work?
No, we don't invest in any mutual funds, in particular active mutual funds that tend to have those front-loaded fees. And so we use a combination of stocks and low-cost ETFs. And so there is an annual percentage fee that you pay for these low-cost ETFs, but it's very, very small relative to some of the other funds that are out there in the market.
Got it. Well, so let's say somebody's listening and they're maybe, with a broker like Fidelity or Schwab or Vanguard or somebody like that. If they wanted to work with Personal Capital, how does the process work? Do they have to, remove their funds there? How does that work?
Yeah, you just go to our website and you can get started right then and there. You can sign up. You can start creating your accounts at Personal Capital, and then you can just automatically start transferring your assets from whatever institution you're at to Personal Capital. And so you can also work with one of our operations specialists that can help you with this transfer process. But the idea is that you don't have to, if you have an old broker or an old advisor or something, you don't have to actually make that hard, difficult call.
Yeah, that could be difficult, especially if they are Uncle John or Aunt Rita.
That's exactly right. Yeah.
Well, one thing I'm a big fan of with Personal Capital is the free tools that you guys have. Can you tell us a little bit more about those?
Absolutely. So this is our financial dashboard, and if you've used the financial dashboard, you have an idea as to what's involved. This is just an award-winning, just a really great place to go and see all your finances in one place. So anybody can sign up. It's free. You link your financial accounts. So if you have a 401k at this institution, you have an IRA or taxable account over here, you aggregate it all together, and then you can view your finances holistically all in one place. You can run analytics. You can start planning for retirement by inputting goals. So you really have a great way to see exactly where you are and where you need to be in order to reach your goals. And again, all that's free to any user that wants to sign up.
That's great. Yeah, and I've been enjoying them. And full transparency, if somebody wanted to use these free tools but maybe not use you guys for wealth management services, is that okay?
Absolutely. That is absolutely okay. There are a lot of people that do that. And so, again, this is just free to everyone. But if they need the help and they want the help for professional management, that's what we're here for. Awesome.
And I understand that there's a potential consultation if somebody's interested as well before working with you guys. How does that process work?
Yeah, so our minimum for account size is 100,000, and so if you have that amount and you want to schedule a free consultation, you can do so, and that'll give you the opportunity to talk with an advisor. They can look at your financial life, see kind of what's going on, and then also come up with what we would propose doing for you, just to give you an idea of the kind of value that we could provide, and if we could answer any questions that they couldn't on their own.
Excellent. Well, Brendan, this has been a great conversation, both about Personal Capital as well as socially responsible investing. If people want to learn more about Personal Capital, consider working with you guys, or just learn more about socially responsible investing, where should they go?
Personalcapital.com. That is the best place to start.
Excellent, everybody. I've had the opportunity to work with Personal Capital as a sponsor of the show, but also as a paid contributing writer, and I really enjoy our partnership, and I've also really enjoyed these free tools over the years. They've really helped me to keep track of my net worth, work on my asset allocation that I have within my investment portfolio, and one of my favorite tools is looking at the fees that are associated with some of my investments and seeing which ways I can save money, and Personal Capital is helping me to do that. So Brendan, thank you so much for your time today. I really appreciate it.
Yep. Pleasure to be here. Thank you, Andy.